This is Justin Amazon on Monday, January 4th, 2021. And for almost the last 6 months here, Amazon's been going sideways. Actually, the last time I did a video was back here on October 19th. And while I've got my cursor here, this candle looks kind of similar to today's. But we've also got a lot of bearish candles through this 3200 area. Not exactly through 3200, but there's some pretty large candles in this range. Let's see, I can't highlight that. So a bunch of them have the high or the open around like the high 3200s, 3300 maybe, or below that. And so that's really going to form a lot of resistance. Bears are shorting it there and doing pretty well today and some other days in here. But if you can picture with me, let me see if I can draw a little out of practice. So this, that was kind of bad. So this area here, there's been a lot of opening bearish candles, larger bearish candles in here. That one, I'll count that one, and this one's a little higher. We got some here. We got some bigger ones here, definitely that. There's just a lot of bearish candles in here. And granted, there's some bullish ones too. That's why we're just chopping. So it's really interesting that, we've been just consolidating here. I had drawn a line down like this and another one even connecting back here up like this, thinking, okay, we're going to have our apex here. We're going to break out and still kind of going sideways. This really could be like a double retest of that kind of an apex here. Totally could be, but just kind of have to wait and see. I thought it was breaking it over here and that didn't happen. So anyway, let's dive into the 5-minute and see what's going on. So from right here, we were gapping up, looked great, taking out, zoomed in too far, taking out some of the afternoon highs from the last trading day of the year, and instead just kind of fell apart. So one thing I'll draw in here, wrong drawing. Oops, wrong drawing. One thing I'll draw in here is some support here. And we looked like we were bouncing off of that and then broke right on through. And then once we broke through that, we had a really nice consolidation here, a little pennant, broke down and retested that twice here, just like I'm drawing triangles. So this could have easily broken out bullish, continued on up, and it did not. Also, what happened here is we gapped from this candle down to open that candle. That's pretty significant on a 5-minute to have a gap like that. I mean, it's not too surprising on Amazon, but it's a pretty big gap. And then let me hover over this candle here. This candle is actually a shaved top. So 3230 was the high of this candle. It was the open of this candle. So we basically, just like on a daily, we gapped down, nearly clearing the low, opening right at the same open. And from there, just crushed lower. And so this was really the place to be going bearish. It had a nice little, what's it called? Nice little uptrending flag. That's the word. A nice little flag here. I'm really out of practice of this. So there you go. There's your flag. And then it continued lower. And then later on, you got a bit of another triangle here, started breaking some lows, had some really nice lows here, not the same level, but once you took out that wick with this candle, then it continued lower again. And it really came down all the way to here. This is 3150, 3145. And this was also 3145. And this came down to just below it. So there were bears shorting it right here. And that's when it reversed. So that was trapping any more bears down here. But this did a really nice double bottom, continued on up. You could have been trading this bullish, made about an R there, a little more maybe. on the breakout. But let's look at what happened right here. If we jump over to the puts, I was trying to find a put that worked really well. I didn't trade this during the day. And I stumbled on the 3,000 put expiring this Friday. And it had a really nice gap there. So from the 945 candle, sorry, the 940 candle, 945 candle had a really nice gap and was right at the $4 price. And you could have had your entry at 4 and your stop at 3 would have filled on the next candle. You know, so you're getting that ready as this candle is forming. So you have 5 minutes to, that's the call. So you have 5 minutes as this candle is forming to set up the trade. And, you know, you got a really strong resistance here. It's gapped down. It's almost like a gap and go, a bearish gap and go, just like you'd have on a daily, but on a 5 minute. It has an inside candle here. The inside candle would have filled your $4 price, and then your target. You know, I'm always looking for the what's wrong way. I'm always looking for doing $1 risk on an option, which is $100. So 4 by 3, and your target could be 2R, and it would have filled right here at 6. You'd be out, and it had quite a ways to go still. So that's one that, you know, just kind of reading the sentiment here that we're continuing lower. We're pulling back further. We have just a lot of bearish candles in this range that are continuing to just show up and continuing to break down here. Still the possibility of having a second retest into that that triangle, and, you know, just playing it that way. And that was the call, sorry. You know, it just continued. Here's the double top on the option, which was not as clean of a double bottom on the call. I was trying to find a call that could work. I've got the 3,300 call. You really would have needed to wait at least till you have a Morningstar reversal here. So let me draw again. I'm switching back and forth between the screens, and it messes it up when I try and draw. So Morningstar reversal here, and then you have another gap here, and then these have similar lows, and this is a really nice stair step that ultimately continues to break out. And so this stair step right around 3160 give you a really nice place to be getting in. So that's these candles here. So you could have been setting up like around 12, but in order to have a $1 risk, you would have needed to have your stop at 11. That's just a little bit tight. I mean, it came down to, let's see, where's the low on this one? 1123 on this one. It still went sideways for a while. You know, it's essentially going counter trend to what's going on in the 5 minute. Not so much counter trend to the daily, because that's just sideways. But it's literally sideways through here. So I guess it's right along with what's happening on the daily. But trying to get that $1 risk was tough. Moving out to, you know, further out strike, you could do like 3350, and you can see what happens down here. It just doesn't move. You know, you have similar candles here right around $7. So, you know, 7 by 6 is feasible, where you've got a stop below this candle at 1150. But again, you're going to want it to get up to like 8 to make an R if you do 7 by 6, and it didn't even get up there. So look, you know, obviously looking back, hindsight, we can see that. And oh man, I almost said hindsight is 2020, which now it is. And I thought this was funny. If I just move to the left, it says 2020 year on that previous 5 minute candle. It does that, just the way I have this framed here, 2020 year. So anyway, just something I noticed when I was looking at the chart. It doesn't, it does do it here. I didn't see it, 2020 year down to the 5 minute. So, and obviously it's here as well on the daily. So yeah, so hindsight is finally 2020. And there we go. So just looking at some of the ways we could have traded this, you know, noticing that gap, you would need to be watching it to see that gap. And then once it goes sideways again here, so this is where it starts to take out some of those lows. Let me switch over to the 5 minute. Starts to take out these lows here at 1030, 1035, 1040. 10:45 Central Time. So you have 20 minutes where it's starting to take out those lows, and it's just going sideways here. And so it's just bouncing back and forth between 6 and 7. Really, that's your range. If you can get it set up with a stop limit order entry and stop both at 7 and a stop, your protective stop down at 6, then if it filled, which it hit the price here 7, but you don't know if you would have been filled there unless you're actually trading it, and you would know. 68 options were traded in this 5-minute candle, so there could have been a few filled right at 7. It's entirely possible. And then from there, it ran all the way up to 13, which again, not knowing where to place the target other than 2R, so that would have been a target at 9. That would have been filled very quickly. If you had not set a target and just set a stop, you could have been trailing it up below each of these candles, or at least like an R away. So when this candle forms, you got it at 6. Then this candle's forming, you move it to 7. This candle's forming, you move it to 8. This candle's forming, you move it to 9. This candle's forming, you move it to 10, and then you're stopped out. So again, that would be 30 minutes here of watching it and moving your stop every 5 minutes. If that's in your plan to do that, great, that would have worked. Or once it makes a high here, set that as your target, and it came back up to that high. Sometimes it's just easier to set it at 2R or 3R and then trail up your stop at a set time, because then you're not watching it and wanting to interact or interfere with the setup. So anyway, that's some ideas on how you could have traded this bearish. I'm still looking for this to have some sort of a bounce. Oh yeah, here we go. I have, so it's still in here on the 5-minute. Well, let me switch over to an hourly here so we can actually see it. So there is one of the triangles I drew, and it did break out from this one, and then it consolidated. And so if we just zoom in on this, you can see we did a first retest, kind of a chop sideways, second retest. Here's our actual first time we've retested right back into that apex. So if we continue bullish tomorrow, I would say this worked. And this actually, pinpointed where this triangle is saying, okay, here's the place that it could bounce. We could still pull back. We could go a little higher, come back down, and even take out this low, and that'd be another retest. Amazon has done crazier things. It's entirely possible. And other triangles have done things similar to that. Like there's a triangle over here. That one totally broke out, came all the way back, looked like it was bouncing on the apex here around the same price, 31.50, 31.60, and started to bounce and then took out the low and came way back down to actually below the beginning of this triangle, or part of that triangle. Sorry if you can't picture what I'm saying. I'm saying here's a triangle like this. And depending on how you draw that, you could draw it like this, and then you've got an apex at a similar price here, and it retested. So saying it broke out, retested, bounced, and then took out the low, then came all the way back down, actually below that line over here. And so that's why I'm connecting some of this with how I've redrawn this and kind of redrawn this at a different angle. And yeah, it's not an exact science, which I would prefer it to be, but it's people, so it's not predictable like that. But we still do have a really good area of identifying, where we've been sideways. So really, this price, the first time we got up into this price, was, what day was that? Oh, I'm looking in the wrong place. July 10th. So we're really just shy of 6 months of being, I don't want to say range bound, but we haven't been so tight on this price. We've gone up to 35.52. We've gone down to below 2,900. So we've had quite a range. Technically, that means that we're range bound, but it's been really bouncing around probably the 32, 31.50 price. I didn't do the math to figure out what the exact middle of this is, but it's approximately in here somewhere. So that's kind of where I'm talking about. 3,200, we've been through there quite a bit. So anyway, I hope this helps. This is just AMZN. Thanks.